Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Mark Howarth. He's the CEO of Skytra. We also have Matt Tringham. He's the Chief Product and Strategy Officer also with Skytra. We're going to discuss how data is used to measure the impact of COVID-19 on the airline industry. Mark, Matt, great to have you with us. Thanks so much for joining us on Trade Talks and what's certainly been unprecedented times for all of our industries. And Mark, I'm going to kick it off with you. Can you explain to our listeners what Skytra is and why Airbus founded Skytra?
Yes, and Skytra's mission is to reinvent risk management for air travel. And the idea emerged from Airbus. Well, Airbus was in conversation with a number of its airline customers over time, and it became clear that there was a big missing component in the hedging services which were available to airlines. Airlines have been able to hedge on their cost side for many years in terms of fuel, interest rates, and foreign exchange, for instance, but they've never had the ability to hedge their revenue side of the equation. And the there's another nuance around that, which is that the cost side of running an airline tends to be very long dated. There's a long dated commitment for buying aircraft, for making investments in the operational side, but the revenue side is very short dated. Our calculations show that something like 90% of ticket revenues come in less than 90 days before the flight departs. So you have this enormous mismatch in the tenors between the costs and the revenues. And together, those are big contributions to one of the key issues for airlines on their pricing side, which is volatility. And so Skytra was designed to provide a solution to airlines to help cope with the volatility and by allowing them to hedge their revenues. And that volatility that airlines see is almost completely out of their control. It's driven primarily by global external events. And of course, we are right now in the middle of perhaps one of the biggest external events affecting airlines that the industry has ever seen. And so Skytra's approach, the tools and the services that we are building out of our big data platform to solve this customer problem has three distinct arms. First arm is a series of big data analytics packages which explain and enhance the information and the analyses available to the industry about what's happening in terms of sales and revenues. And those are services and packages that are available today. And the second arm is the creation of a series of regulated benchmarks, the Skytra price indices. And my colleague Matt's going to talk about those in a moment. And they measure the cost of air travel around the world. And then the third arm of the business is a regulated derivatives trading platform, which is based in London, and that will offer futures and options contracts based on the price indices, on the Skytra price indices, and thus that's the route that allows interested parties, airlines, and other participants in the sector to be able to make these risk trades, put these risk positions on or lay off risk based on the indices. They will use the Skytra trading venue to do that. And of course, the trading venue is built in conjunction with Nasdaq and on the Nasdaq technology platforms. So the price indices themselves are geographically based. They measure the cost, the average cost of travel in economy across different regions around the world. We measure 28 of them at the moment. We're publishing initially, when we receive our regulatory approvals, we will publish 6 of those indices to start with, and those indices will measure the average cost of travel in North America, in Europe, and in Asia Pacific, and then the trans-regional routes between them, trans-Pacific, transatlantic, and so on. My colleague Matt will talk us through now how those indices are put together and some of the analysis and insights that we're able to draw from them today about what's happening to the industry within the COVID-19 situation.
Excellent, Mark. Thank you so much. So, Matt, can you shed light on the data that Skytra uses and how it's applied to the recent infographics on how COVID-19 impacts the aviation industry?
Yeah, absolutely, with pleasure. So as Mark highlighted, we came into this because we wanted to create the ability for airlines to hedge their volatile revenues. And as part of that, we realized that a certain amount of infrastructure had to be created. Probably first and foremost out of that, a benchmark or family of benchmarks where we would capture the price of air travel with a view to that then being used for the settlement of financial contracts, futures, options, and so on. So we've done a lot of work over the last 3 years identifying the types, the topology, the types of data that one can find in the industry. And what we identified was an opportunity to create a new, more valuable data set, we think, because we found that out there you can find information monitoring the volumes of tickets booked. You can find flight monitoring data from a variety of different sources. And you also have some companies who are doing screen scraping and providing commercial intelligence for actors in the value chain and other interested parties. But there's nowhere we could find somewhere where we had the combination of actual real ticketing or transaction-based information with the specific pricing to go with it. And we thought that would be an interesting problem to solve. First of all, this would help us to measure the price of air travel in different markets. And also we thought that this would probably allow us to create further value down the line, which is exactly what we're doing with this COVID analysis. So what we've set up is a unique database which combines the most complete ticketing database in the world, which is owned and managed by IATA, so the trade body representing the worldwide airline industry. And we're cross-referencing that data source, which captures nearly 50% of worldwide tickets issued, with a second source of data, which is delivering to us about 20 billion price checks a day around the world. And by cross-referencing these two data sets, we're able to pull together both our price indices, but also some very interesting analysis, which has actually got real specific pricing for tickets that have been issued on it. We're going to look at two sets of data today. The first few things we're going to look at are specific analysis that we've put together for this COVID-19 crisis. So this is product analysis, which is a touch less mature than our price indices that we've been working on for several years.
Okay, and your chart indicates sharp declines in revenue, particularly in Asia Pacific. Can you provide further insights into which regions are most affected, and when do you predict the market to make an upturn?
Yeah, absolutely. So yeah, our first chart is looking at weekly ticket sales in the different regions around the world over the previous 7 days. And as we can see here, as we would expect, the Asia Pacific market was impacted first of all by this COVID crisis, really starting off in sort of early to mid-January, so a dramatic downturn in the value of weekly issued tickets for the airline industry, and then followed by the Asia-centric markets, so Asia Pacific to Europe, Asia Pacific to North America, and then about a month and a half later, a pretty radical impact on both the European market, the North American market, and the transatlantic market too. Where we stand today is that we are in net terms looking at essentially zero revenue for most airlines around the world and for most markets, because in fact the pace of refunds is keeping pace with the issuance of any new tickets, so neutralizing any extra cash coming into the system. Apart from in the Asia Pacific market, where we seem to have stabilized at about 90% less ticket value being sold per week compared to 2019. Now, all markets have been affected. The first one to be affected was the Asia Pacific market, but all the other markets have basically followed on behind. And what we can see is that Asia Pacific has stabilized at 90% down. It looks like there is a very, very slight recovery in the North American market in the previous 7 days, but it's a little bit too early to call that one.
All right, and you also mentioned certain airlines were severely impacted at the start of the crisis, which is evident in your chart. Can you provide more insight into how U.S. airlines are performing today?
Yeah, so the North American market is actually probably the most optimistic market at the moment. What we see is that if we look at specific airlines, then we suspect that their refund policies are driving a lot of the changes, because normally refunds and exchanges are not really a significant part of the analysis of ticketing, but of course during this crisis they have become very, very dramatic. And so we saw certain American carriers with a very brusque entry into the crisis, and what we found was that we noted they changed their refund policies, and directly after that we're seeing these enormous drops in revenue as all the customers are asking for refunds. Whereas certain other carriers are doing their best to issue vouchers or to reallocate people to travel in the future. And that's leading to a less radical influence on their ticketing cash flow.
And speaking of the future, what does travel look like going forward?
Well, at the moment, the North American consumer, as is often the case, seems to be the most optimistic about the future. So it's very difficult to see proper green shoots at the moment. But when we look at the bookings over the past 7 days and how they're spread out over the rest of the year, what we have seen over the past weeks is a strengthening trend in the North American market, where, yes, sales for Q4 this year are radically down on last year, but they're only 50 to 60% down for November and December, rather than 100% down as we're seeing in the European market or the Asia Pacific market. It seems that consumers in other parts of the world are very much playing the waiting game and seeing what happens before booking the tickets, whereas in North America, some people are still buying to fly.
All right, Matt, and one more question for you. Can you talk us through how the Skytra price indices have performed? Is it performing as expected?
The short answer to the question is yes, absolutely. And the longer answer is quite interesting, because we asked ourselves the question right at the beginning of the crisis. This is a multifaceted crisis. It's not just a demand shock. It's not just something putting people off traveling. Governments have put in place pretty draconian, unthinkable restrictions even 6 months ago. And that's combined with really radical reductions in capacity for all airlines around the world. And with that in mind, we were wondering really what the impact on pricing would be. And what we've seen actually is that there has been a radical impact on pricing, because travel is still happening, just at a lower rate, and airlines are essentially discounting tickets with a view to driving demand. So we saw radical 15, 20% drops, 30% at some points drops in price for Asia Pacific and the European market. And interestingly, the most radical drop of all actually was in the North American market. Now, North American air transport has had probably the most stable pricing over the past decade or so, due to the probably the strongest consolidation out of any of the markets around the world, as well as the capacity discipline of the North American airlines. And here we've seen a drop which is about 40% over the past couple of weeks. And part of what's driving this, we suspect, is that capacity hasn't been cut in North America quite as much as in other regions. The fact that people are still a bit more optimistic about traveling might be driving that decision on the airline side. And what's particularly interesting is going to be how things perform in the next 6 to 8 months. Because, of course, when you're forbidden from flying, not a lot's going to happen. It's a crisis, it's painful, but there's not a lot of dynamism, there's not a lot of volatility. What's going to be very interesting is how, when the restrictions are lifted, consumers and travelers start looking at holidays, business travel, and so on in the future. And that's where we expect that the prices will get really interesting, where we can expect to see quite a lot of volatility, I would guess, over the next 9 months.
Matt, thank you very much. Appreciate the insight. And Mark, we're going to wrap it up with you. How do you see Skytra's launch this year being impacted by the current climate?
Well, as Matt said, we've seen that the price indices have reacted as we expected to see them change. As part of the building up of the indices and the infrastructure around that, of course, we put in stress tests and we imagine failure scenarios and so on. And I don't think that in our wildest imaginations we would have come up with something that is quite as stressful as real life has proven to be. But we've seen that even under these extreme conditions, the indices are doing their job. They're measuring the market. They're providing a valid, a reliable, and a useful benchmark for the industry to use. So we are confident that as we go through the rest of the year and we receive our regulatory approvals, we'll meet our launch dates and our launch targets. And I think it's pretty safe to say that as the sector returns to normality, that there certainly won't be a reduction of interest in risk management and hedging tools. I think that that's something that's very much going to be at the top of everybody's agenda in the market, and we are going to be in exactly the right place to help serve that need.
Mark, Matt, thank you so much for taking the time to join us on Trade Talks.
Jill, thank you very much indeed.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.